And we are live. What's up, John? It is
Hey, Jack.
April 1st, 2026, and
April Fool's Day.
it is Fool's Day, that's for sure.
And the biggest fool of all is speaking in about 5 minutes.
Sweet.
Maybe not the biggest fool. He's foolish enough to become president, so he's not that foolish, but he's foolish enough to start a war with Iran.
Yeah. It's hard to say if that dude's playing, and I don't think it's actually him, but the people around him maybe are. It's hard to tell if they're playing 4D chess or, if they're all trying to play different games.
They're playing regular chess and they're not good at it.
Yeah. Well, yeah. I mean, that depends on which perspective you look at all this stuff through.
I'm looking at the perspective of the price of oil and the control of the Strait of Hormuz and our diplomatic relationships with European countries and Middle Eastern countries, and the list goes on. But before we get into that, Jack, if today was your first day in crypto, what would you do?
If I knew what I know now?
Yes, knowing what you know now, what would you do if today was your first day in crypto?
I would probably, do one of two things. And I'm not sure which one I would do if I was new, because I can't, I wouldn't, what I know now is hard to say, you would, I don't know. It gets a little confusing for me. I'd do a couple of things, though. I would either put whatever money I was going to spend on crypto, probably through the beginning of a dollar cost averaging strategy, into either Bitcoin or tokenized gold, or just some stable coins, right? Waiting for some certainty, waiting
Talk
for
about the dollar cost averaging. What does that mean?
just deciding on a regular, recurring basis, and you can pick whatever that makes the most amount of sense for the individual, right? Like maybe somebody says I want to spend $5 a day, $1 a day on crypto, and then they go and they buy $1 worth of crypto every day, and then they do that every day. Or maybe they don't want to do that every day. They don't want to be looking at their crypto all the time. So they say, instead of doing $1 a day, I'm going to do $7 a week, and I'm going to do my buying or selling on, in this case it's always buying, on Monday, because historically that's the best time to buy Bitcoin, for example. And then you just do this, every day without fail, regardless of what the price is, each and every time. You can even set it up so that it's automated. But I would either employ that DCA strategy and just start buying coins without paying attention to what the price was, or I would put that into stable coins right now, and then just kind of sit on what everybody in the industry is so fond of referring to as dry powder, which refers to loading a musket back in the colonial era. Making sure that the black powder you kept in what was called a powder horn, but was actually a little container full of, essentially gunpowder, and you would put that into the musket. You would tamp it down with a tamping rod, add your wad and musket ball, tamp those all down. You can strike the flintlock and hold on until the thing's shot. And they would say that you got to keep your powder dry, because if your powder got wet, you could not use it. It would be no good anymore for firing your weapon, and therefore rendering you useless in battle. So you had to keep your powder dry. And so then now they talk about it in crypto, where it's like you got to keep some dry powder so that when it's ready to shoot, when you're ready to shoot your shot, you can. That's kind of the inference reference, I would assume. But I mean, I don't necessarily like this reference, but it's what everybody says. So.
Right.
I'm saying that now as someone who's been around crypto to someone maybe who has never been around crypto, and so if you hear that term, that's what they're referring to. Yeah. Well, that was just it. So it's either kind of a DCA strategy or build up a stack of dollars, ready to deploy quickly.
Ironically, yes, and I agree with you on all this. And it's ironic that right now dollars is like the best asset. Except for maybe oil stocks. But Yeah, if it was my first day in crypto, I definitely agree with sitting in cash for the moment. I think the bottom, if history keeps on rhyming, which it has been for a while now, October, I'd wait for October to buy in, and I would want to buy in with Bitcoin around 30 or 40,000 or so if it gets that low. Um, and DCing is great. Like you can just set it and forget it. Like that's the best thing. Honestly, if you want to keep your sanity in crypto, it's one of the best things you can do. Like, and also, if it's your first day in crypto, realize it's unless it's just not a good idea to have 100% of your assets in crypto. Like almost nobody can stomach that ride. And if you're, I mean, don't do that. It's too volatile. You can try it, but you're not going to like it. I can already think and assure you.
Yeah, try with 5% of your entire stack and see how you feel about that.
10%, 25%, 50%, whatever. I wouldn't go over 50% no matter what in crypto. Like it's just too volatile. And then the other 50% can be cash or gold or
I
stocks
think
or a mix of the three.
yeah, I think I keep very little of my overall portfolio in actual crypto, and that's enough for me to get stressed out.
Yeah, and if it's day one in crypto, okay, so I would just start with Bitcoin. Don't even mess with altcoins. When you do want to start messing with altcoins, look at Ethereum and Solana, and don't even look beyond that for at least a year. Like, don't even mess with anything else. And during that year, it's study time. And if you don't like studying, you probably should not be in computer science nerd territory because that's where you are. You're not in cool guy territory. You're in computer programmer as nerdy as it gets territory. And the nerds are going to take your money if you don't do your homework. This is not the football field. You're not going to win by being tough. If you think you're tough, then sit your ass down and read a book. Start with the Bitcoin Standard by Seyfettin and Moose. And I think read that book and go and then watch a little bit of you got to learn technical now. The thing about crypto is it's so goddamn volatile. Like people always talk about hold on. First of all, that only works for Bitcoin, and second of all, it's a harsh ride. And it probably wouldn't be too bad if you buy real hard in October of this year, and then just hodl after that. You'll probably be okay. You're definitely gonna have to suffer through 60% drawdowns probably, but probably not 80 or 90% like it used to be. And we're in the middle of a 50% drawdown right now. Bitcoin's already sitting at a 50% drawdown right now. I do think it's going to go down another 20% from the top, which is another 50% from right now. So hold your horses. Like Jack said, just either sit in cash or DCA. But you gotta learn. Read. I mean, do yourself a favor. If you're gonna read one book in your entire life, the best book you could possibly read is The Bitcoin Standard by Seyfettin and Moose. I guess maybe read your religious book first, but the second book you should read is this one. And I like the chart guys for technical analysis. And technical analysis just means reading price charts, and that's super important because crypto's so volatile. It really helps to be able to read price charts because it just helps. And there's, and I would just start with those two things. I would read a Bitcoin Standard Safety News. Oh, actually, Benjamin Cohen is another good YouTube channel. I would look at Benjamin Cohen as well. Maybe just check in with Benjamin if you're uncertain about what's going on. Look at like the last couple videos that Benjamin Cohen has made. Whenever you're, because he does like a Bitcoin video once a week. He'll do, Ethereum video once every week or two. He'll do a video on like whatever's going on in the economy or the news once a week. And it's just a good way to. He's really good at reading long-term price charts. The chart guys is a day trader, but he's really good at reading charts. Period. And can show you how to read charts if you go through his like tutorials. He's got a beginner thing. But anyway, so that's enough.
Yeah, if you think that what you see here on our chart looks like, oh my god, like what is going on here, then you definitely need to get your learn on for charts, because we're not even doing, none of the stuff that's out there is very complicated.
Yeah, check out the chart guys, chartguys.com and the chart guys YouTube channel. You need to learn the basics of technical analysis. You should definitely learn the basics. Learn what moving averages are, learn what trend lines are, learn what support and resistance is, learn what an uptrend is, what a downtrend is, things like that. Learning RSI is helpful. But he's got a whole video on just what is RSI, which I highly recommend as a advanced video, I guess. But beginner videos, he's got like a 9-course video on like introduction to technical analysis or something like that. It's really, really good. It's like 9 videos. Each video is like 20 minutes. Like, and this is time to invest, right? Because how long does it take you to make, like, if you're wanting to throw, like, let's say you just want to throw $1,000 at crypto, how long would it take you to make that $1,000? For me, it takes like I don't know, 30 hours at least, 40 hours to make $1,000 probably. And that's not counting my living expenses I gotta take. If I'm taking my living expenses out, it might take me, months or years to make, well, not years, but maybe, definitely months, if not a year, to have $1,000 of like extra money. I have more money than that now because I learned technical analysis, because I use those skills in the crypto market and the stock market and gold market, but mostly, well, crypto and stocks I make money on. Anyway, but that's what I would do. Anyway, let's go on to today. So Trump is probably already speaking now, which to me I think was a sell the news event. I'm not. You probably put on that Bitcoin USD chart down and go on like a 1 5 minute or 1 hour or something, or 15-minute or something like that.
1 second.
I don't necessarily know how Bitcoin's going to react to it, but Trump, the markets have been paying attention to what Trump's been saying, and when Trump says we're gonna cause chaos in Iran, the markets go down. Trump says, just kidding, we're gonna make friends with Iran, the stocks go up. And on Sunday night, Monday morning, he said, hey, I'm gonna make friends with Iran. Oh yeah, sure enough, there it goes. It already dumped. Yep, it's all the news right there. Bam. Because the markets were crashing hard on Friday, and today is Wednesday. On Friday, markets were crashing really hard because like bombs were flying everywhere. And on Sunday night, Monday morning, Trump said, hey, don't worry about it, guys. I'm gonna be talking to Iran. Like, we'll probably be out of the war within a couple of weeks. Like, it's winding down. Like, don't worry about it. It's all good. And Monday and Tuesday, the markets were super green, which I was upset about because I've been in cash for. I actually went all cash right before the Iran war started, and then I felt like a genius because I sold all my stocks and all my crypto and I sold all my crypto in October, but I was picking up pennies in front of a steamroller is what I was doing. So yeah, Trump is talking, so it's volatile. People are dumping, people are buying. Go to the weekly Bitcoin USD chart.
Why does it do that?
Is your computer hesitating?
No, it's just like the range disappears. I don't know where it goes. What did you want? The weekly?
Yeah, let's start with that. Okay, so notice that EMA 12, the yellow line, like it's staying below that, which it probably will for the bear market. When it finally goes above that EMA 12, then it's time to look like, have we bottomed out? But right now, it's still rejecting off that EMA 12, and
it's not even close to the EMA 12.
Yeah, just recently, a couple weeks ago, rejected off of it. It'll probably still continue to go down. Like, I don't think it's even going to go up as high as you're drawing right there. I think.
Oh yeah, that may be it right there. That may be the bump that I drew. Right here.
Yeah, like that might be it for the bump. And I forgot what my point was. The Iran war started. I'd already sold. Go to the daily chart. You see better on the daily chart. I'm sorry. Picking up pennies in front of steamroller is what I was going to talk about. So overall, the trend, actually leave it, don't change it. Leave it the way it is. Just close that bar. So you see that part in the middle of the chart where it's going sideways for a little bit. Back about a month or two back in, I don't know, November or so.
Here?
Yeah, right there. Okay. So like, let's say I bought somewhere in there knowing it would rebound, right? Because it went straight down for a little bit.
Mm-hmm.
And like it went up a little bit, right? Like I could, so that's picking up pennies, right? If I'm buying the dip somewhere there and I'm picking up pennies, but then it crashes really hard, really fast, right? That's the steamroller. I'm getting steamrolled. If I bought in that middle part, thinking it was going up, because it was an uptrend. That is a daily uptrend right there. There's higher highs and higher lows for, about, well, this is the weekly chart. So that was for about 8 weeks. That's like 2 months. For 2 months, Bitcoin was going up, right? And I'd be like, oh, I want to hold Bitcoin in uptrend. Well, you can, and you can make a little bit. You might have made, what was that bottom wick there in that middle part?
No, I don't know.
You can just mouse over it, and it'll tell you at the top. Yeah, what's the low there?
80,537.
Okay, and then what's the top of that green wick about 8 candles to the right?
This one?
Yeah.
The high is 97,939.
97. Okay, so the bottom was 80 and the top is 97. So you made like
more like 98. Close
sure.
to 98.
So you made 15, 20%. Like, but unless you were like totally precise with it, you're taking that giant dump to the face. Right, that's the steamroller. So like you might be able to pick up a little bit, a few percentage here, a few percentage there, and we're doing it again. Right, this little sideways we're doing here is the same thing. And look at 2022. Yeah, you guys zoom it way out. Go back to 2022. And actually, the top of 2025 there, you probably see the same thing. And then you can't really see in the monthly candles. You may need on weekly candles again. If your laptop lets you scroll through the back 4 years on weekly candles.
It will. It's just I need a mouse and I don't have one right now.
Yeah, you're doing all right though. There's the bottom right there, and then okay, so you can see. You can see there the beginning of 2022. There's a little bit of sideways action, right, where you could have picked up some pennies in front of the steamroller up there. Yeah, right there. There's some penny picking up action right there. But then it hit that 50 moving average and dumped real hard. And then you'd be like, oh, I can buy the dip, right? A little bit of sideways action, hit the 200, but it held support in that blue line for a little bit. You're like, okay, I'm doing all right. I bought the dip, and then bam, you get hit one more time. And that's finally when you're buying is down there. But or you can dollar cost average. All I'm saying is I felt like, I had bought in a little bit. You can go back to 2026. I a few weeks before the Iran war, when Bitcoin hit 60,000, where those green arrows are, I was buying right there. And I was buying with the intention of not holding for very long, because I knew that we're in a bear market. I've got my bear goggles on. Like in a bull market, that's a dip for buying, right? We hit the 200 moving average, like we bounce up pretty hard, like the RSI. Look at the RSI; it's all bottomed out, right? That's a dip for in a bull market. That's a dip for buying. But I got to put my bear goggles on. We're in a bear market, and in a bear market, this is a bear flag because the flag pole is that red, the long red straight down. That's the pole. And then the sideways chop is the flag. Now, a bull flag is the opposite. We can see bull flags right there from 2024, right on the left side of the screen right there, where it's a green pole up, and then kind of a flag that's going down a little bit. That's actually a bull flag, because it's a pole going up, and then going down only a little bit in the chop, and then a big pole going up again, and then kind of going chopping down. Now we have the opposite. That's what a bull market looks like. Now we're in a bear market where it's a big pull down and a little bit of chop, kind of slightly up chop. Where in the bull market it was a slightly down chop In a bear market, it's slightly up chop, but then a big pull down. Where in bull markets, a big pull up. So that's what I mean by bear goggles. I got to keep my bear goggles on. I got to not get too excited about going from 60K to 73K. Like that was good, 20% again. Like we're getting these little 20% moves, which if you're a trader, like that's great. But I think it's easier, especially for beginners, to keep your bear goggles on for the full 12 months, which is how long the bear markets usually last, how long it lasts. 2022 bear market was 12 months, 2018 bear market was 12 months, 2014 bear market was 12 months. The 2026 bear market, probably going to be 12 months. It could be different, but until proven otherwise, it's going to be 12 months. So, Jack, the other thing I wanted to point out was in 2022, not only did Bitcoin go down, but stocks went down. And not only did stocks go down, even gold went down. And I think we're at that same point in 2026 where Bitcoin and gold and stocks are all going to go down. That's why I'm sitting in cash. Yep, so you can see 2022 right there on the screen. It's already there in the middle. You got a nice downswing there. Now it only went down to the 50 because it's stocks, and stocks go up only. So that, yeah, you're moused over. I think the COVID, not the COVID, the tariff. That was Tariff Liberation Day. But then the like slower downswing to your left. No, it's your left, other left.
Oh,
older. Yeah, that's 2020. No, even older than that. That was just a little blip in the right. There you go. That's the 22 bear market. That's the 2022 bear market.
Yeah, I'd already showed. I mean, yeah, that one. So I'm sorry, I didn't realize you were going back to that.
Yeah, no, that's cool. Yeah, so I mean, 2022, we already looked at Bitcoin, that went down. We're looking at stocks, that went down. And you can see now stocks are just starting to go down. Now, could they hold that EMA 12? They could, but also they're ran wars on. Oil's up, like everybody's scared, like that shit's not gonna hold. Like there's a little bit of green right there. Trump's talking, but man, when Iran bombs Israel or Saudi Arabia or UAE or Bahrain or whatever the fuck country they bomb next, when we try to run oil tankers through there and they bomb the oil tankers and Strait of Hormuz, that shit's not going to go up. The stock market, there is no way the stock market, which has already been going up. Look at since 2022, we got a little couple blips in the radar, but it's been going up. And you think the Iran war is going to make it go up more? No, this is the excuse for it to crash finally. Like, we're due for a bear market. It's been 4 years. It's time for the bear market. Lo and behold, the Iran war shows up. A great excuse for a bear market. Oil prices are going to be high. Almost every company has oil as part of their expenses. If they have electricity or transportation or anything as part of their supply chain, like so many things rely on oil. Most companies, their expenses are going to be higher. If their expenses are higher, their profits are going to be less. If their profits are less, the stock's going to go down. And crypto's in a bear market already. And let's look at gold now. What about gold? Gold doesn't have to worry about profits or anything. What does gold have to worry about? Let's look at 2022. First of all, that big ass red candle, we can worry about that. We'll talk about that in a minute. Let's go to 2022. That big monthly red candle on gold is not good. Oh, there it is. Yeah, so, not too bad. Not as bad as stocks and crypto, but I see about 8 or 9 red candles in a row. Right? What was that top, that little green wick, the super high volume?
2070.
Okay, 2000. And what's the bottom line?
1617.
Okay, so it pulled back 20%. Now, the interesting thing is gold has already pulled back 20%. Because this year, it went from 5,600 down to 4,000 or so.
Yep. 4,100.
Yeah, 5,600 to 4,100. It's a 1,500 drop. It's possible that that's the bottom for gold. Definitely, like, if there's one thing that, if I had to buy something, I would buy gold.
That's what I meant.
Besides, like, oil stocks. I'm not buying any crypto at all.
Yeah, I'm sorry, I don't mean to cut you off. I've been in gold for a little while, and I'm actually starting to consider nibbling. But I'm like, man, I don't know. I'm waiting to see if it's. I think it's gonna go drop, more. But this is where my mind starts playing with me, and I gotta be like, hold.
Well, right, because I mean, we had. I mean, look at that. We had like 30 green candles in a row. If we had any red candles, they were tiny, right?
Yeah.
Like the gold's been on a bull run since 2023, but so has crypto and stocks, right? And crypto and stocks are pulling back now. Gold's been doing really well, but here's the thing: countries have been buying gold because they don't want U.S. Treasuries anymore because of inflation. So they're like, well, I don't want to hold Uncle Sam's fucking garbage.
And
I
do
want to
you
hold.
expect and do you expect that to continue or to lessen?
Yeah, yes, I think that'll continue. However, oil prices are up, and you can't heat your house with gold. You can't drive your car to work with gold. You
No.
can't plow your fields. You can't run your tractors. You can't fertilize your fields with gold. You need oil for that. People got to eat. People need heat. They need food, and they need transportation.
Yeah, but you got to buy that oil, and you got to have some gold to buy it, unless you're buying it with USD. So
Right.
you're still selling stuff to buy gold too.
Yep. Either way, there's going to be less gold purchased with the dollars. They've been purchasing gold with dollars, to other countries and other banks, but now they're going to need to use those dollars to buy more oil because oil is more expensive now. They don't have, gold
Or
is a better
gold if they're
place to
buying
invest.
it from Iran.
Right.
They might, Iran may say, no, you gotta sell. We'll sell it to you in gold.
Yeah, they could do that, but and they're gonna be selling gold then, not buying it. Right?
Who?
They were buying gold. Countries were buying gold to lose cash.
Who's going to be selling gold?
People that need China, Japan.
No, they're gonna go buy. They're gonna either buy gold and then go give it to the Iranians, or they're going to use the gold that they already have to give to the Iranians.
Dude, part of that big red candle, Turkey sold like 20% of their gold reserves in like 2 weeks.
Yeah, Turkey isn't known for financial brilliance.
Yes, but they've been stacking gold. They've been stacking gold the last few years. They've been stacking gold like crazy, more than most countries. But they just sold a bunch, and they didn't sell it for popsicles. I guarantee you, they sold it for oil.
Yeah, Turkey may have, because Turkey's a NATO country. Yeah, I guess my point is that there's always people buying and selling gold. Like,
yes, but
I feel like
money, right?
I feel like you're closer to, I think you're more correct when you say that this is probably the bottom here at 41,
it could
4100.
And also, what often
at least for now.
Yeah, and what often happens in crypto is it'll wick down like that. Like that's a wick, right? It was less than 4,500 for like I don't know how many minutes, but not long, or 4,400 I think. It just wicked down there. But usually what happens, it'll wick like that, and then it'll over the next few weeks or whatever, it'll kind of come back down there to rest, and then it'll finally start climbing back up. Like we saw that in Bitcoin and crypto on October 10th when it wicked down, that big liquidation day on October 10th of 2025, and then like you'll see it in 2022. You can even see it. There's wicks down, and then it kind of fills in. It's just what happens. Like eventually, that wick eventually got filled in, and then I think it's going to happen because we had a wick down to 60. I think we're going to fill that in too and crash below that. Like the wick kind of shows you where the market wants to go. Sometimes it's a thing. I just think like dude, I love gold. Like beyond this Iran war, like and I still hold some gold. I'm holding all my. I'm not selling any of my physical gold. Like I'm not selling any of that. I turned like 90% of my gold tokens on Ethereum into USD tokens, Tether and Circle, stablecoins. But I'm gonna buy back in gold when I'm confident the bottom's in gold. I just think that the buying pressure that gold has had for the last 2 or 3 years is not going to be as much because of the oil sucking the oxygen out of the room. right? Like, and most the countries that sold their oil not in dollars were Venezuela and Iran. Venezuela sold their oil for gold and Bitcoin. Iran sold their oil for gold and Bitcoin, and both of them are. I mean, Venezuela is going to have. We have not allowed Venezuela to export any oil since we kidnapped their president, um, and we're trying to stop Iran from exporting oil. And I truly believe that that was the cause of both of these wars, was the fact that Venezuela and Iran were not selling their oil in dollars. The United States is trying, and Trump is trying to strengthen the dollar. The dollar was weakened, or has been weakened since 1970 by coming off the gold standard and printing more dollars. So the dollar's purchasing power, especially when measured in gold, is down and down. And you can measure that. With a you can pull up another chart if you want to. The one slash gold, right? That put that chart in. Make a whole new chart. This is the dollar chart right here. It loads up.
It didn't change it.
Oh, that didn't work.
1/GOLT.
Yeah.
Do I need to like choose one of these down here?
Maybe try that.
This first one?
Sure.
Okay. Where do I want to go?
I don't know.
I have chosen you.
We're having technical difficulties here.
There. No, it's not changing it. It does not like this chart.
Well, just imagine turning your screen sideways and just having it go down only. That's what it looks like.
Oh, so inverting it.
Yes.
Because this is essentially this is gold against this is gold divided by the U.S. dollar, but what you're talking about is the U.S. dollar divided by gold.
Right, and it's just the idea of the petrodollar, where the United States since 1974 or so forced all the oil exporting countries of the world to sell their oil in dollars. And in exchange for our quote-unquote protection, same kind of protection that the mafia gives store owners in their town, and because oil is priced in dollars, other countries have to buy dollars to then buy oil, and it just gives the dollar more purchasing power because everyone's using it.
Because we finance our purchasing by other people holding our debt in the form of treasury bills.
That's the second part of the petrodollar, is that also not only do those countries need to sell their oil in dollars, when they receive the dollars for the oil, they have to then save those dollars as dollars. So they have to save as U.S. treasuries. And I think we've also allowed them to start buying U.S. stocks as well. And so, but then, Saudi Arabia and countries like that, they've been doing that. And that's why the dollar's been strong. And, from 1980 to 2000, gold went down versus the dollar because the countries weren't buying gold. They were buying treasuries the whole time.
Mm-hmm.
But as the 21st century has dragged on, these countries are starting to realize that it's not such a deal for them.
Specifically after the U.S. seized Russian assets when Russia invaded Ukraine.
Yes, that was a big wake-up call, especially for China, who is worried about going to war with us, that they don't want their money stolen by us. And so they're going in on gold. And so there's a lot of that. There's that's what's going on with petrodollar and gold, and that's all I got for now.
Yeah, we've been going for a while too, so we can probably end it there.
Yeah,
that's we've gone over the charts we wanted to go over. We've talked about what we would do if we were starting right now, and that's either basically sit on some cash for a little while or begin buying little bits at a time here on an automated basis.
Do some learning.
And well, either way, in whichever strategy if you were choosing to employ one at all. And by the way, none of this is financial advice. We're not financial advisors.
Yeah.
But if we're just telling you what we would do.
Yeah, the beauty of dollar cost averaging is you don't need to pay attention to charts. You just
Exactly.
need to make sure you're dollar cost averaging the right assets.
Exactly. That's yeah.
And then the beauty of technical analysis is you don't even have to have the right assets, but you have to have the right timing. And
you just have to be able to read the chart, and the chart will tell you when to buy.
I like to do both. I want to make sure I'm in the right assets, and I want to make sure my timing is good. So I do both, but I have a lot of free time on my hands.
And if you want to learn how to do that better, feel free to smash the subscribe button with notifications turned on, and go watch our other videos, which are basically geared toward us. If we were starting over again, what advice we would give ourselves. And so feel free to check out any of our other videos if you're watching this for the first time. Yeah, John, thanks so much, man. And we will go ahead and cut the stream unless you got any final thoughts.
Nope.
All right. Well,